All right, traders, tomorrow is going to be a very important day for the stock market as the CPI data is coming out in the pre-market tomorrow. It typically comes out at around 8:30 a.m. Eastern Standard Time. I do believe the last time this occurred, what ended up happening was the SPY ended up gapping down massively, and then it ripped back up into the pre-market, into the market open. And as soon as it went back to that previous closing price, as soon as it filled that gap, it started to have a reversal. It formed resistance, it had a reversal, and it got crushed, and it went back towards those pre-market lows, towards that massive gap down. So if we see a similar pattern in history where the SPY does gap down, we are going to be looking to play put options once we get a bearish confirmation, signs of resistance, signs of it struggling to break out at that specific previous closing price, which is going to be $427.41. That's something I want you to keep in mind in terms of pattern recognition and history repeating itself for tomorrow. We do have to see what the CPI data says. So let's get right into the price action analysis. Like I said, tomorrow is going to be an extremely important day for the market, and it should be a very lucrative trading day within the stock market. So if you do want to trade live with us at market open via live stream within the chat room, there's so much more to it. That's going to be the first link in the description where you get instant access to that. Make sure you watch the previous video that I posted as well. That's going to help you out a lot. So in terms of the SPY, the whole theory is, and what I'm hoping for is, I'm hoping we get a massive gap down. So what you can do is, this is another thing you can do in the pre-market, you can look to short if you're in with this theory, you can actually look to short stocks before the data comes out in the pre-market if your broker allows you to do that. And then in terms of the market open opportunity, what I'm hoping for is SPY has a big gap down. I want SPY to have a gap down, the bigger the better. And if that occurs, the game plan is very simple. Wait for it to rip back up to the previous closing price at 427.41. I want you to keep this in mind. This key 427 level has huge downside potential. Just look at the downside we've been seeing on SPY with these crazy moves. This went from, take a look here. It had a gap down as soon as it ripped back up. Remember, we played the puts here towards open. As soon as it closed that gap at market open, it got crushed. We're looking for the same thing to occur, right? This went from 432 all the way to 413. So we're looking for a gap down. Once it rips back up to the previous closing price, which is going to be 427.41, look for resistance, look for bearish candlesticks. You see it come in, start buying the puts, playing the puts. We're looking for that big downside move back again. And if you just study how the SPY has been reacting towards these levels, I mean, it wasn't too long ago where just yesterday, this was at 427 and it went all the way back to 414s in the after hours. So the point being is, if we can see this 427 crack and react as a resistance level, the SPY is going to get crushed, especially with this whole CPI data that's coming out. So if this does gap down massively, hopefully we do get that opportunity where it rips back up very quickly towards market open into, the first, 30 minutes. The quicker the better, and the bigger the gap down, the better in that situation, right? Overreactions is what we want. This is what we want. We want overreaction. Bigger the gap down, the better. The quicker the rip, the better. And then if we can get that towards open, where it starts struggling to break out, forming resistance, breaking down, once it hits that key level of 427.41, we're going to be looking to play puts, and I'm going to be sizing in fairly nicely with a max risk of around like $428. So in terms of some of the put options you can look into, tomorrow is going to be March 10th. So in this particular situation, what I would do is I would go with March 11th contracts, and I wouldn't go too far out of the money. I would go with like a 427 strike or a 426 put strike, right? That's what I would specifically do. I would keep it close to, at the money or slightly, 1 or 2 points out of the money. With that being said, that's the game plan for the SPY. If this somehow, that's all I'm interested in doing in terms of tomorrow, playing like a 427 key breakdown resistance, 427.41 gap close reversal, the gaps down, right? That's all I'm really interested in doing tomorrow. Now, say this rips up. My next level of interest for buying the put options is going to be right here. This gap filled in pre-market. It never filled during normal trading hours. So there is still a gap to fill at $432.17. So if the SPY can turn 428, 427 into support, continued uptrend, it's going to start to fill this gap. Not interested in playing it for a call, really. Much rather just wait to see how it reacts here. If it reacts as a resistance level, I'll look to play the puts there. If it breaks out and reacts as support, then it's going to start to fill this gap from 435.71. So in terms of Thursday with the whole CPI data and this whole situation as of now, I'm looking to play puts at key resistance. So if it does gap down, hopefully we can get a spike back towards open at that previous closing price. As of now, it's not moving too much. It's kind of just sitting. But I'm telling you, I remember how this reacted when the CPI data came out last time. I believe it was at 8:30 a.m. It sold off like a flash crash, and then it ripped back up. It spiked just as fast as it crashed, and then towards market open, it hit that previous closing price. This key level that I'm using, on my charts, the PCP strategy, the gap close reversal strategy, right? It hit that level. It basically did this, right? It gapped down, it ripped back up, and then it just got crushed once it hit the previous closing price, which is currently 427.41. So that is my game plan on SPY. And I'm telling you, that plan that I just gave you, if we can get that opportunity, that is going to be one of the best trading opportunities for the entire week. So I'm looking forward to seeing how this plays out tomorrow. I'll give you guys the new updates within Trader Society towards market open when we do a live trading stream. In terms of stocks that I have on my radar. So in terms of tomorrow, my number one play is going to be SPY. You guys have requested me to look at a couple stocks. So in terms of stocks, not really interested in any stocks right now. I'm still holding 30% of my PROG shares. I bought this at $1.14 towards the lows. Yesterday, technically 2 days ago, if you're watching this, like later on, but, right here on March 8th. And, I'm still holding 30%. I locked in at like $1.28. I sold 70% of my position, and then I'm still holding 30%. PROG looks like it's going to continue to try to uptrend. It's not the most bullish chart at the moment, but the bulls are still taking control, and it is currently gapping up in after hours. So I'm still holding some of that because it's still oversold and the candle was green on the daily. In terms of interesting setups that some of you guys have been talking about. So AREB, I have a member, he's swing trading this. He made over, I think, like 27,000 today. He's currently swing trading some of this. What I want you to understand is big upside and big downside levels. So heading into tomorrow, so this closed at 160, it's gapping up. You requested me to review the stock, right? Take a look. So what I want you to understand is there is a lot of resistance. We're going to call it at like 172 and 176. This is going to be your resistance zone. If the stock is breaking down and it's looking bearish at this level, I would just cut it. The most I would risk is like 160. I believe you got like a very, very good entry on this. But yeah, like that's the absolute most I would risk is 160. Just understand if 170s is reacting as resistance, we're looking at a hard sell-off to 160. If 160 cracks, and if 170s is reacting as resistance, 160 will most likely crack easily. Just look at how it reacted here. You're looking at a hard sell-off to 140. So I wouldn't risk more than 160 in terms of your upside potential. 175 has to break out. If 175 breaks out, it goes to $2. If $2 can break out, turn that into support, then you'd be looking at, more of a situation towards, I would say like 230, 240. Not my type of chart or type of trading style, but you wanted me to go over that one. So that's what I think about that one. Just understand there's a gap to fill right here at $1.57. If this stock cracks 157, it's going to get crushed. It's going to be on track to have a gap close reversal and to fill the gap below. So it's either make it or break it. If 160 cracks, it's basically over and it goes back to 115. That'd be the new best price to buy the AREB for another scalp. Bumble had a massive gap up. Only thing I'm seeing with this one as of now, I would wait for the first red day, and that could be tomorrow. When this stock, Bumble, it had a massive green day today at 42%. When you see it, red on the day, whenever that is going to be, I don't know when it's going to have its first red day, but when that happens, I would look to short. I would look to play puts at the open. So keep Bumble on your radar for a first red day short. That's something to keep an eye on as it's approaching key resistance In terms of CEI, I am looking for a dip buying opportunity on this. This stock is having crazy gap close reversals. Let me show you the power of this gap close reversal strategy. I'm about to blow your mind on how this can work both ways, right? So I'm not going to be teaching all the lessons within this in terms of how it works. My last video that I made goes over a lot of that within Trader Society. That's where we teach all of that, step by step. And we also do it within the live trading streams where you get to watch me trade live. But I want to just visually show you how well the strategy has been working with CEI. There's a gap to fill above here. There's a gap to fill above here. There's a gap to fill above here. Check this out. CEI gaps up. As soon as it comes back down to this previous closing price at 59 cents, it bottoms, has a reversal, and it explodes up, has a gap close reversal. And then what does it do? It starts to fill the gap above. It starts to fill the gap above. It starts to fill the gap above. And then you could see once it fills that higher gap, like I told you guys, what I always tell you guys, oversold gap close reversals is where you buy. Where's the oversold level? Right here at 60 cents. That's where you buy. Where's the overbought level? The highest ones? Right here towards 162, towards 180. That's where you sell. That's where you buy the puts. That's where you go short, right? And even so, you see the gap close reversal, see how it worked here on the long side, and then see how it worked here on the short side when we were playing puts. Go back and watch the CEI video. We were playing put options at 175. Those puts printed like crazy. It went from 175 to $1.05 in one single day. The strategy got us in towards the top. And even today, the stock had a gap close reversal. The stock gapped down, and as soon as it filled the gap, it had a reversal. So the strategy is working crazy within this stock. That means it's going to continue to work with this stock. So this is something that we know that other people don't know. We're like snipers, man. We're trading these gap close reversal levels like a sniper. We're trading them at the best prices possible. So what I'm telling you is within some time, this stock, it just had a massive sell-off. It just went from $2 to $1 in 2 days. It dropped like 50% from the highs, right? So what I'm telling you is when we fill this gap, there's a gap to fill at 78 cents. We're going to look for those bullish confirmations to come in, that confirmation that this previous resistance reacts as a support level, and then it explodes back up. But understand, what would make that trade better if there was a gap to fill above? That's why if you watch my video on CEI, I was hoping that, it gaps down, and it did gap down, but I was hoping it wouldn't go back up to fill the gap above. See how it went back up to fill the gap above? That means that there isn't a gap to fill above currently, which doesn't make it as useful. It doesn't make the strategy, because it's like a two-part strategy. You can combine two strategies together, where it's like a gap close reversal. It fills the gap, has a reversal, then it shoots back up to fill the gap above. The issue is there's no gap to fill above. So as of now, if it doesn't gap down, as of now, it's just a gap close reversal, which is still great. But it's better to have that second strategy where it's a gap close reversal and then it starts to fill the gap within the reversal. But since it's so oversold, it still should be a good play. So when we get to about 78 cents, I'm going to be looking to buy shares, going to be looking to buy some call options on this once we get the bullish confirmations that we use. So see how I got my price alerts set, see how we're strategically trading at these key levels, only trading like snipers while everyone else is just giving back all their profits, diamond handing, getting screwed in between, not understanding where to enter, where to exit, right? So this is going to be a really good setup. Some of you guys have asked me about Dunkin'. In terms of Dunkin' stock, there's a gap to fill at 1738. It has a lot of resistance right here. It's forming lower highs. It looks bearish. It looks like we're going to see a gap fill at 1738. If that cracks, we should take out 1689 and go to about 1650. I'm currently bearish on Dunkin'. Not interested in playing puts though, as it's just extremely low in price. I like focusing on resistance levels. Its buy is currently towards a resistance level. So in terms of Coca-Cola, it's make it or break it for this stock right now. The micro daily candle, this isn't, quite bullish. I mean, look at what happened here. It formed this candle towards support and it sold off massively. It formed this candle towards support. It sold off massively. Micro Coca-Cola price action is looking bearish. I'm still holding my leaps. I'm currently up like 20% on my Coca-Cola leap puts. You guys know I've been planning for that March 18th gap fill 56. It's definitely still possible, but I'm currently up 20% on those. With that being said, a lot of you guys have asked me also, well, can we still play a gap close reversal on Coca-Cola? One thing with the gap close reversal strategy is when the gap closes, it tends to not work as well, right? So the main answer would be pretty much no. That would be the main answer. Once the gap already fills and it had its little reversal, that's pretty much it. Now, if it turns bullish on the daily with green candles, then it could be a swing trade. But with that being said, if this cracks this 58.66, we're looking at a nice quick 40-cent pullback, I would say, for the micro. And within those 30-40 cents, you can make a quick, 40% return on contracts that are like at the money, close to expiration. So Coca-Cola is becoming interesting. It gapped up, it filled the gap, had a reversal, sold off. It's looking bearish. It looks like we're setting up for a crack. So we'll see how that reacts tomorrow. If it's going to hold or crack or not, we'll see. In terms of other stocks, let's take a look here. Like I said, I'm not quite too interested in anything else for the time being. Lucid is becoming a little bit interesting towards this 2570. There's a gap breakout at 2570. So if it can break above that, it's going to start to run and fill this gap. If not, and it reacts as a resistance, we're looking at a gap fill to 24.24. Most likely going to see a gap fill to 24.24. So I'll keep an eye on that, and then we'll see how it reacts once that gap fills. That's not going to be an ideal gap close reversal because it's towards the lower end of the channel. See, a more ideal one is because it's towards the middle of the channel. More ideal one was right here when it filled this gap at the low end of the channel that it had a nice reversal and shot up, right? That was the more ideal one a couple days ago. You can see right here, look at the strategy, guys. The bottom of the channel was right here. It gaps up, and then it gaps down the next day as soon as it fills the gap close reversal, and then it rockets. So many gap close reversal opportunities. It's going to get you in at the low of day when you're right in terms of buying. And if you're wrong and there's no trend reversal, you get stopped out. It's going to get you in at the exact high of day when you're right and you're buying puts. And if you're wrong, you get stopped out. At the end of the day, it's like when you're right, you're getting in at the highs. When you're buying, when you're shorting, when you're buying puts, you're getting in at the lows. When you're, buying calls, when you're, buying the stock, right? It's the best fucking strategy. There's nothing like it. It's so simple. So from there, it's just mastering it. It's just understanding, okay, how can I make this a better strategy? How can I make this a better setup? How can I get it where instead of trading, one of these every single day, where I make more money trading a higher quality gap close reversal just twice a week instead of, 5 times a week. So it's just really understanding how to identify the potential within these. Like I said, CEI should be decent. What makes them better? I went over that in my previous video. But for the most part, that's really going to be it. CCJ, this is another one I saw within the chat. So I do agree with you guys that at some point, this stock is going to pull back. So the only thing I would look to do with this one is the midterm put swing trade. That's the only thing. This would be like a passive income midterm put swing trade. We give it at least 2 weeks, most likely like 30 days. That would be an ideal time frame, and it would be a passive income play. With that being said, the key level that I would be looking at is 28.49 towards the all-time highs. This is a very strong green candle. It could go higher above that. So we have to wait for it to consolidate and for it to just sit. We have to wait for these red bearish candlesticks to come in, So once we can start to see those confirmations, it's going to take some time. But once we get those confirmations, then we'll look to swing trade a put. As of now, I wouldn't do anything with it. But yeah, the reason why I do somewhat like this one is it's towards key resistance and there's gaps to fill below. So from here, it's just waiting for some bearish confirmations to come in on the bearish candles on the daily chart. I believe that's going to cover it. For the most part, yeah, I really think that's going to cover it. So those are the top stocks that I'm watching. Upcoming plays, I mean, we'll see how Coca-Cola reacts. CEI, that potential gap close reversal. I set a lot of price lists as well. I'm not going over all of them within this video. Bumble could be a first red day. AREB, I'm not interested in doing anything with that. That was requested by a member. And SPY, that's going to be the main play for me. It looks like tomorrow is going to be a SPY. So yeah, if you do want to join Trader Society, it's going to be that first link in the description down below. It's a one-time fee and you get lifetime access to the program. That's limited time only, and you will be grandfathered in. Eventually we will be raising the price, and it might end up turning into like a recurring program that ends up being a lot, like, very expensive. So if you are looking to get grandfathered in at a one-time fee, lifetime access, it's going to be the first link below in the description. You get lifetime access to the educational video lesson library, where you get to learn how to master the gap method trading system. You get to learn how to master the price action technical strategies that we're using. They're simple, they're highly effective, they're trend reversal strategies. They're gonna get you in at the best prices. They're gonna get you in at that great timing. I'm telling you guys, these, I've never seen anything like it. I've looked into everything. This is the best strategy I've seen. I keep it stupid simple. I don't try to complicate it and try to add all these strategies. Like I said, if you use a compound interest calculator and just put in like 1%, you'd be surprised on like how quickly your life can change within just 1 year of consistency of doing well within the market. And it's definitely possible with trading options. I've seen it happen. So with that being said, you get lifetime access to the educational suite, the video lesson library, where you learn the mindset of trading, the psychology behind trading, the risk management, the position sizing, the unique gap method trading system, the gap trading strategies, the price action trading strategies, the confirmations we use to buy and sell, all of that stuff. And you also get access to the chat room and the live streams that we do every single day at Market Open. You get to watch us trade live at Market Open via live stream, ask me questions live on the spot. Within the chat room, you can also send me a direct message and get one-on-one messaging there. And there's a lot more to it. There's the stock watch list, there's the stock analysis, and of course, surrounding yourself with the community of traders along with myself. And there's a lot more to it. So if you do want to check it out, it's going to be the first link down below in that description. Thank you guys so much for staying to the end of this video. Thank you so much for investing your time into your education. And let's crush it tomorrow. I'm telling you guys, tomorrow within Trader Society, this should be a great green day. And I'm still on the green streak. In terms of today, I'm still on the green streak. I had a small loss on SPY, a bigger win on SPY, and then another smaller loss on SPY. And then Coca-Cola was great, but I got scared out because I didn't want to give back the rest of my profits. I was up like my portfolio was up 5% on the day. And, I ended up giving back some profits on a loss after that. It dropped to like 1.80%. Then I entered Coca-Cola, got scared out quick. And then I said, you know what? I have to call it. I want to stay green. And I made enough mistakes for the day, so it's time to call it. But yeah, the green streak does continue. So with that being said, guys, it's going to be the first link down below in the description. I will see you tomorrow live at Market Open.